using this price pattern. This video is going to be in two parts. The first part of this video, I'm going to go over to the whiteboard and go through exactly what this price pattern will look like and how you'll be able to start finding it on your price charts. Then the second part of this video, we'll go over to some price charts so you can actually see what exactly it will look like on a price chart and how you'll be able to start finding this pattern for yourself.
So let's head over now to the whiteboard. That way.
So as I said in the intro of this video, we're going to go through this price pattern that's going to give you that benefit of perhaps finding a reversal in the market before it actually happens. This is going to help you with your emotions in trading. It's going to help you to start understanding the way the markets move, and it's going to give you that more freedom with your trading. Now, this pattern I'm now going to go through on the whiteboard first, then we'll go through that second part of the video showing you on the charts. Is a pattern that I studied and became aware of when I used to trade with price action before I trade with supply and demand. So it's a great addition to help you to find a reversal in the market. Now the pattern itself is a simple pattern to actually find and to understand what's happening on the chart. But first I want to show you, if we have a bullish market and we're looking for a reversal, the typical pattern you may find is in fact say a pin bar. Now there are different ways to look at trading a pin bar, and in fact if you want to see a video next or later on just trading the pin bar, then leave me a comment below, let me know if it's a video you want to see. This video is not about the pin bar itself, but going to be around this candlestick and how you will use this as the reversal. Now what we're looking for is when we see this bullish move to a previous high, before this candlestick even happens, or even if we see, let's say, a bearish reversal, perhaps an engulfing candlestick, we want to see a pattern I'm now going to show you to identify this could be a time you want to look at the charts to look for that trade. Now, what I call this pattern is the inverted hammer. Now, you may know that as a pin bar or hammer, and what we're looking for at the high of this move, we want to see a bullish or a bearish pin bar showing you the market has pushed down by the bears, but then they will push back up by the bulls, and we've ended up with this candlestick. This is the pattern in the market I want you to start looking for in your charts. Now, more on the second part of this video, so you need to keep watching to see exactly what you'll be looking at, because this is not going to be the pattern you're always going to see. We're going to look at some variations in the second part of this video. Now, this is where we were looking at that potential reversal. Now, if you've seen this pattern and then you get the actual bearish pin bar or bullish pin bar here, then this is a great indication that you want to be selling this market, and you're likely then to see a big drop off where you're going to catch a nice trade to downside. Now, either you can wait on that time frame, look for an entry based on this type of candlestick pattern, or you can go down to a lower time frame where you'll be looking for a reversal using, say, the confirmation entry or the use of a supply and demand concept. Now, more on the understanding of these types of trades on the supply and demand concept you can find throughout this channel. I'll leave a link above now for you to go through the confirmation entry to understand how you could apply that with this strategy. So this is the reversal you're looking for. This is the candlestick you want to see at the high of that move. Now, what about when the market comes down for a reversal to the upside? Let's quickly just wipe this off. If we're seeing a drop to the downside, let's try and get a nice looking bearish candle. And when the market comes to the downside, you're looking for the exact same thing. Now, in this example, I'm going to use an area of demand. Let's say we have an area of demand here, when the market's come into an area of daily demand. When you see the market come into demand, perhaps you struggle to find a reason to take a trade at area of demand. Well, this is going to help you with an area of demand with your supply and demand trading. And if we see here an actual bearish pin bar forming at this area, let's say it closes a bullish candle, but it's at the low of the move here into an area of demand. This is now going to indicate to you that there's a potential reversal coming. And the next candle could be, let's say it's a pin bar inside this area of demand, or it may even be a bullish reversal candle out of the area of demand, or bullish engulfing if we remove this, and the market continues higher. Now again, in this area, you could then look for a reversal with the confirmation entry in that video I suggested earlier. Now, this is the pattern. Again, you're looking for this candlestick to form at the low of the move. And there's also a pattern you can use with this as a continuation pattern. So let me just quickly go through the continuation pattern, and then we'll go on to the second part of this video, going through exactly what it's going to look like on your charts to help you to identify those patterns. But let's say we have a bullish move to the upside like this, and the market then eventually creates a retracement. The market's always going to pull back, and as the market pulls back on this retracement, where we're having a pullback, now whether you're coming into an area of demand, you could be using a Fibonacci tool retracement, whatever it is that you're using in your trading. If we then to see a pin bar at this low of this retracement, so there's your move up, there's your pullback, and then you see this pattern, that is a continuation pattern now. You can then look for an entry to go long off this area. And that's how you could then start using it. Instead of just a reversal area to go the opposite direction, you can use it as an entry. Let's say that the market didn't do the pullback and we just had a down candle here, followed by an up candle, and we had a sideways market. And then you saw this pattern forming. Then you can start to understand when you see this candle, you know the market's going to go to the upside. Now we'll go through an example of this and the different variations of this type of candlestick in the next video, because you really need to understand there are different variations, what's going to help you to identify this. So let's now go over to that second part of the video, and we'll go through some price charts so you can start identifying this on your own price charts, and hopefully it's going to help with your trading. So we'll go over now to those price charts. I think it's this way. I'll see you there. So great, we've made it to the charts, and what I want to say first is now you've been through and learnt this pattern on the whiteboard, we'll go through these charts of the pound US dollar so you can see exactly what this pattern will look like on some charts. But the main thing is you do not want to be going anything lower than a 4-hour time frame, and just look at applying this pattern, looking for it on the 4-hour and higher. Now this is going to help you to stop seeing the noise in the market and getting confused with this pattern. Now I haven't got to go far to show you this pattern. I'm not going to go back and back test this. I'm going to allow you to do this once you've watched this video, as it's great practice to help with your ability to become a better trader, to back test something once you learn it, to see how you find it to help you in your own trading. So what we're going to do first is go through to this D4 time frame. Now when I'm talking about time frames, I'm not just saying going through the 4-hour, daily, weekly and monthly, but actually using like the 4-hour, the 8-hour, the 12-hour, the daily, the D2 and the D4 and so on. So let's first look at this D4. I want to go through and show you how you can identify this pattern, and later I want to go through also of this pattern, the different variations you can also use to understand the market is reversing. Now that is not what I went through on the whiteboard, but you're going to have that extra education in this second part of this video. So if you are still watching, you're going to get something that somebody else is not, now they've actually left. So what we can see is the market has dropped down here and we've pulled back up. Now this is going to show you a reversal using this pattern. And the pattern I'm going to identify is that bullish pin bar right here. We have a bullish pin bar at the high of that pullback, followed by this bearish engulfing candle, and the market drops away. As you can see, I haven't gone far back in time to show you this pattern in real time. And straight after that pattern, we have this pullback followed by this candlestick here. Now what that is going to show you, this bearish candle, there's no follow through, and that's showing you a continuation pattern, where this is showing you that reversal on this candle to the downside. This is showing you a continuation to the upside. Now going through multiple time frames, this will allow you to see this in real time. So let me go through these two areas so you can see how you can apply this to your own charts and understand how this pattern works. So first we have this candlestick here. I'm going to mark off this one as well. We have the 10th of the 9th and the 12th of the 10th. So now we drop down to the D2 time frame. If we mark off the 10th of the 9th, which is this one here, and we mark off this one here, which is the 12th of the 10th. This pullback here This candlestick we can see right here is what I call that rejection pin engulfing candle. Now you don't know at this point whether the market is going to continue higher, but with what you've learned through this pattern, what you can see is that this market has pulled back and this pattern is occurring at the high of the move. So a pin bar or this type of candlestick is exactly what you want to be looking out for when you're looking for that potential reversal to the downside. Now, what I mean by this type of pattern, if we have, let me just quickly show you what I mean. If we have this pullback like this in the market, and then we see the pattern of this candlestick appearing, so we have this candlestick right here at the pullback, then that is likely to indicate a continuation higher. But if you have this pattern at the high of the move, like here, then it's going to likely indicate a potential reversal back. So hopefully you can see the two differences, but that area where that candle is located is extremely important. And when we have this candlestick forming here, that's also in agreement with that D4 candlestick we have here. So that gives you further confirmation of a potential reversal. Now we do have, after that candlestick next to it, this smaller rejection candle pin bar to the upside, and we don't see the follow through and we have the market drop away. And if we also look at this one, we can see the market rallies up, moves sideways, creates these two rejection candles, especially this bearish one, and then we see the bullish move back and we go to the upside. Now that is showing you a rally, pause, continuation. Now, if you've not seen all the other videos in this channel with supply and demand, that could be classed as a rally-based rally. Now, if we go to the next time frame of the daily, look at the same thing, the 12th of the 10th and the 10th of the 9th. Let's mark those out. 10th of the 9th, I believe, is there. And the other one is the 12th, which is there. Now, at this point on this chart, we just see a pullback and a potential continuation. But look at this little bullish candlestick. And that is indicating that reversal. We then see this reversal bearish candle, and if you know how to trade those lower time frames, you can see there's a pullback here on that bullish candle and the market dropped away. Now, as well as that, we also have a manipulation of this high and the high of this candle, which is covered by that line. We just move that line. You can see this candlestick here. That is showing me a manipulation, and this market is likely to fall, as well as that pattern you now understand going through this video. Now, to find out more on the manipulations, there is a video in this channel. I'll leave it linked above now for you to understand what this manipulation is and how you can use that in your trading with this type of pattern as well. Now, that is the reversal here in the market. Now, if you use that entry on that bearish candle, you've got at least a 3-to-1 to the downside. Now, again, if you're using an entry on this pullback, you're going to have something like a 10-15-to-1 out of that trade. So going down to lower time frames, understanding how to trade off the lower time frame, you can increase that risk to reward much higher. Now, looking at this movement here, we have the rally, base, rally, I was talking about. You can also identify this bearish rejection candle, followed by another one next to it to move that line. This candle here, then we have the bullish candle, and this is where you could have then taken a trade to the upside, knowing the market's going to go higher. You've seen the sideways price action followed by these candlesticks, no follow through to the downside, and it's also going to give you an indication that you know that these areas here of supply are going to be removed and the market's going to go higher. And that's how you can look to trade this sort of thing, combined with everything else inside this channel. There's a trend line break here already as well, which means there was an area of demand, which you could have marked here. If you mark it from the wick, you can see we actually retest it on that candle. There is actually a video in the channel as well. It goes through the hidden zones of supply and demand. That's a great video for you to understand how to find those hidden zones. But this is to show you this pattern, and that is the pattern I'm talking about, where we have the rally, sideways movement, price doesn't go anywhere. This is what I call that continuation price pattern. There's your continuation to the upside. This is the reversal pattern. So we're seeing this candlestick here, and obviously on the higher time frames we're seeing that candlestick at the high of the move for the entry to go to the downside. So that is just looking at those higher time frames. We haven't even looked at the lower time frames. And as I said, I do suggest doing your back testing after watching this video. If we go to a 8-hour time frame, quickly looking at this pair, you can see that the market, we don't always have these candlesticks a pair, but we do have this bearish candle to the downside right here. And you can see that is a perfect example where the market rallied to the upside. Now looking to the left, you may have found an area of structure, an area of demand, why this happened. But that is a perfect example of the type of candle which will indicate to you a reversal. This candle has happened at a low of the move, followed by an instant reversal candle. And this is in fact an inside bullish candle, which would indicate to me a great time to take a trade. And you could have taken a trade here and you would have caught a 2-to-1 easily on that trade. That is the type of candlestick you're looking for at a reversal. Now remember, the type of candlestick you're looking for continuation would be that same candlestick, but you're not looking for the market to give you that pullback. You're looking for the sideways and then looking for the continuation, which comes into that rally base rally, drop base drop of supply and demand. Now if we quickly go down to a 4-hour time frame, look at current price, see if we can see these patterns. Again, this is the lowest time frame I would actually go to applying this type of pattern in the market. We just go back on some of the recent price action, and if we look at the market, we can see here straight away the market has actually gone higher, pulled back, and then at this point when we pull back down, we pull sideways. We can see this more of an indecision candlestick, but it is that long lower wick bullish candle followed by that bearish candle, and price dropped away. That is how you can indicate that reversal. Again, here we see this bearish rejection candle at the low of price. We don't see any follow through to downside, and we see a bullish response. The market goes higher. So this can be applied to the charts on the time frames from the H4 and higher. I really wouldn't suggest going any lower than that. The pattern itself, again, is either that pin bar, or we're looking for this type of candlestick, a rejection candle. They can both be used. That is the extra type of candle I'll be looking at when taking a trade using this. Now, a continuation type of pattern, again, we can see the market bounces up here. We create this rejection candle. We see the market move sideways. We do not go lower. We then create this bullish candle, and that is where I'll be looking to take my trade. Not only is that a great time to look to take a trade off that reversal, understanding how this pattern works, but we're also seeing a manipulation of these lows here in the market, and the market is showing me a nice bullish pin bar to go to the upside. On top of that, on the lower time frames, we're going to see areas of demand being tested, and that is more on what you'll learn inside this channel. Now, to help further your education, there's going to be a video popping up next which is going to help with this type of entry, understanding supply and demand, as I go through those trade reviews in this video. Oh, and before you go, if you really want to take your trading to the next level, then you need to check out my free pre-recorded webinar, link below in the description of this video, so you can start learning how you can build your account balance without blowing your account by risk and money management. I hope to see you there.